Hi, everyone. Thank you all for coming today, and huge thanks to Vani and PK for that inspiring talk. So we're going to follow on some of the topics that they touched upon today, specifically about the funding environment and kind of the gap that we have in certain stages more than the other. With that said, I'm excited to be here with some of my really good friends. So I'm going to have them do an introduction about themselves. If you can all do a quick round of intro. Vikram, thank you for stepping in and appreciate and really excited to hear your kind of insights around this as well. So if you could do a quick round of intro about you, your fund, and your role, that would be great.
So, the founder of Ivy Care Ventures, we are a seed to Series A venture capital fund. We manage about 4,500 crores today, all domestic capital. We have a portfolio of about 35 companies. We invest across sectors. We are sector agnostic.
Hi, everyone. So happy to be here. Anisha Singh. I run an early stage fund called She Capital that invests in early stage, mostly consumer tech, but we look sector agnostic. I think the fund name in itself speaks for the fact that we either need a female co-founder or need it to be female focused. Prior to this, I used to run Maidala, and everybody used to ask me, Maidala kya hai? So this time we kept it very simple, and we ran, when we decided on She Capital, it was pretty obvious what we did. So that's me.
Thank you, Anisha. Good morning, everybody. I'm Sarita, part of Bloom Ventures. We are a 11-year-old homegrown VC fund. We're sector agnostic, invest in early stage, seed to pre-series A. We recently closed our fourth fund, which is a $250 million fund, and we have 100 plus portfolio companies. So happy to be here today, part of the panel.
Thank you. Before we dive in, just a quick intro about me. I'm Priya Rajan, Managing Director, Market Lead for India and Middle East North Africa for Silicon Valley Bank. We work with startups and funds as they expand their journey from India into the global lens. Let's dive right in, and this is with regards to current market conditions. I know PK touched upon this quite a bit. You know, it's not where it used to be last year, let's just face it. There has been a significant shift on the global stage. I would love to hear from you guys. How has the market condition, the global and its relative impact to India, how has it had impact across stages and also sectors? I know some of you are a little bit more earlier than others. Maybe Vikram, we'll start with you.
So, we've seen very interesting trends, especially in the last 2 to 3 years. COVID, of course, changed the world a lot. 2020, we saw a lot of money getting printed in the US, which actually created huge amount of liquidity in the market, because of which a lot of that money found its way to startup ecosystem and the stock markets. Last year, we saw valuations jumping substantially. We've seen, very good IPOs happening last year. And I think as the liquidity started drying up this year, we've seen substantial pressure on startups who were actually burning a lot of money. And if they had not checked that, and if they were not breaking even, I think they've been struggling. Actually, this year has been very tough for them. So unless, they've course corrected on their business models, either they've already gone out of the market or they will go out of the market very soon. Investors are waiting to deploy. They're basically just waiting for the shake-up to settle down and see who are emerging as winners in this market, and we're still sustaining. A lot of dry powder sitting there, about $16 billion of dry powder, people waiting to deploy. Of course, a lot of that is going to come back to the market. I think we are anticipating in the next 6 months or so, you will see deals happening and action coming back. But that said, I think if you look at the investment kind of a trend, 2021, the bar chart, looked very high in 2021, but I think that was mostly driven by late stage investments. But if you look at seed to Series A, that trend is still growing. So this year, the seed to Series A investments actually grown as compared to 2021. So from 2.3 billion to close to 3 billion already, going up to maybe 3.5 billion, and next year we're expecting about 5 billion. So I think that's a good thing to happen. So overall, I think we as early stage investors are quite excited and looking forward to making a few investments in the next few months.
And Vikram, just to follow on that one, do you see a lot of like PE, VC, larger stage going into your ecosystem of going in earlier? Because I think that is also kind of keeping that early stage deal volume up.
Yeah, so there is a substantial kind of excitement getting generated at I would say pre-Series A, Series A stages. Of course, seed and pre-Series A has been now primarily driven by a lot of platforms. We've seen quite a few platforms coming up over the last few years. Of course, Mumbai Angels, Indian Angels, and other angels in Chennai, Hyderabad, Bangalore. They've been there for a while, but we've seen newer platforms which have actually started investing very early, and that is actually going to continue to happen. But if you look at pre-series and series A, the ticket size has increased. When we were investing in series in 2015, 2 million was a good size for a series A. Today, even a 5 million is not good enough. So which means that if somebody was doing a 15 million ticket size, and if they're looking for good investments at Series A, so they'll actually maybe even come down to do a 5 million, 7 million Series A. And we are even seeing 15 million Series A transactions happening now.
That shows momentum. It's still there. Anisha?
So I'm a founder first, right? And so I want to just table something. As a founder, we have to, if you're playing for the long run, you have to get used to this up and down. So all this hue and cry about, winter's coming, this, that, it's going to happen. It's going to happen. You're playing for the long run. You're building for the long run. So you're going to see this cycle that goes through, which is, and hopefully everybody sees it. And it's a good check on your business. So I think what ended up happening was valuations were crazy. We were seeing early stage companies with no revenue or very little revenue come and ask for unrealistic valuations, which I was just, you had to be smoking something serious to be asking for that kind of stuff. And so for us, I think this is a good time. It's a good time for founders to go back and say, what am I building? And am I building a valuation? Am I creating for a valuation? Or am I actually doing some value creation? And what is this? What am I building for? And is it sustainable? Is it realistic? And so that's really important to be asking yourself these questions. We've seen, founders that came to us about even 8 months ago with asking for 12x, 10x, now come back to us with very realistic valuations. And actually, they've come back to us with realistic projections, which are more sustainable rather than saying, hey, this is what the market's asking for, this is what we're building for. Public-wise, I think, we've seen the IPOs happen. I think it's good. It's a reality check for even them, right? Delivery is down 50%, Zomato's down 60, 70%. It's public markets are tough. They don't play trends. You're going up, you're answerable, and you better have your act together in terms of just being able to deliver. And I think that's what's happening, right? We're being asked to deliver, and it's a great time. Some will build up to it and deliver, and some will actually have to figure out something that makes them deliver, because you can't go into a public market because you had venture pressure and then not deliver. So that's broadly it.
That's a great point. And this is a global trend, not just India. It's happening globally.
Yeah. My God, the tech stocks in the US are taking a beating. But I think that's also because of the inflation rates and everything.
Absolutely.
So.
Sarita?
Yeah, so I think pretty much aligned, but in the early stage, we are seeing still traction. We're seeing deals coming in. It's not like founders. In fact, a lot of founders are thinking this is a good time to start up, right, when things are low and there's no pressure as such. So we are seeing, in fact, in India, what's happening is we're seeing second-time founders, right? Ex-Flipsters, what we call Flipkart, from the InMobi mafia, from Udaan, a lot of folks actually stepping out and saying, okay, we've learned, we've grown, we've built logistics, we've built products, and now we're ready to build for Bharat or for the globe as well, build in India for the globe. So I think the India story has been in the making for the last 10, 12 years, 15 years. But now in the last 3 years, we've been in the limelight. Of course, like Anisha mentioned, there will be ups and downs. We've seen multiple cycles of these ourselves. So I don't think there's a reason to panic, but I think it's a good thing for the ecosystem because valuations are a little more realistic. we've recently seen some of our SaaS companies which raise, say, 2 million at like 15 million, in spite of seeing 3x growth. So they come back and say, but I'm getting the same valuation. So we're like, it's okay, it's fine. Don't worry about the valuation. It's in the grand scheme of that 10-year journey, doesn't matter so much. So yeah, what we're seeing also, one point that I wanted to make is when we're taking our companies IPOs, what we're telling them is leave 20% on the table for the retail investors, right? Because I think that's one thing that we haven't got right, and a lot of the retail investors have burnt their fingers investing in tech startups. So we don't want that happening because it's going to come back and bite the ecosystem in some form. All of us are going to suffer. So I think broadly, that's something we've been talking to our startups about. And of course, all of them are now looking to increase runway because we're looking at the next 18 months being a little slow in terms of late stage funding.
And that's a perfect segue into my next question. The title, Minding the Gap, is kind of, it covers a variety of spectrums. It could be the gap in the funding, gap in kind of a talent, gap in terms of like, how do you, in extending the runway for a variety of things, growth at all costs is no longer, the strategy anymore. So from that lens, you guys are all working with your portfolio companies, kind of making sure they're surviving and thriving through the next 18, 24 months or whatever that period is. How are you advising your companies, whether be there's a gap from a C to a Series A or A to a B or B to a C, how are you advising them to extend their runway?
So in our case, I think we've always focused on unit economics and profitability mindset. So that's been our biggest driver from investment perspective. However, the last 1 year, the pressure on that has become even stronger, which means that even if the companies are sitting on cash for, let's say, next 12 to 18 months, we are still encouraging them to go to the market to raise more cash. So, and if you're sitting on only 6 months cash, I think, then you're in a SOS situation. So I think, there are lots of internal rounds happening. So the investors have confidence on their founders and the business models they're working on. We've done a few internal rounds as well. So we know that, we don't want to depend on outside capital because, even if they can raise that outside capital, it'll come at highly discounted valuations as compared to the business where they are at. So I think that's where, if you are a fund sitting on capital, you would rather deploy that capital in your own portfolio than actually add to your portfolio at this stage. So a lot of that has happened actually. May not have got announced in the markets because, people are actually continuing to support the winners. So I think the people who have not done well, it's also shown that this is a time where people have actually seen that if you had a certain mindset, in terms of burning a lot of money and somehow focusing on your top line, and so it's a lot of that has got tested, right to the bottom, and I think it has separated boys from men, and otherwise as well. So I think that has actually helped the ecosystem get more mature. Investors have also become more mature. So it's good for the ecosystem is the way I see it.
Great, thank you, Vikram. Anisha?
Yeah, so I think I have it slightly easier, by the way, because women founders in general tend to be a little more conservative, all right? We've actually, over the last couple of years, told them, thoda aur kharcho, thoda aur kharcho. So I do have it slightly easier than, because they've, in general, been a little more conservative and tight on cash. That being said, I think this is a great time if used, correctly. So far, every founder is fighting for marketing eyeballs and dollars, right? And the first thing anybody cuts down on is marketing, most obvious. But I think this is a great time to find pockets of marketing that you could use effectively. Similarly for hiring. Okay, so the one thing we've gone back and said, don't overhire. That's one thing, do not make the mistake of, no matter how much funding you raise, your team is solid internally. But now's a great time to go out and get some, with all the layoffs happening, find those key people that you could at a, like they were overpriced and out of the market, you're able to find that. So I think there's opportunities in this market, and we've told them to look at that, while making sure that they all have runways, because one never knows, how long. I mean, Game of Thrones went on for a while, so maybe we're on for the long run for this one.
I think most of the points covered, but broadly focus on unit economics. Yes, of course, that's kind of the holy grail. But given we have a large portfolio, we have a mixed bag, right? We have the very aggressive founder, and we have the conservative founder, and we have all sorts of founders. So, and they're on their own path. We can guide them, but broadly, I think we do tell them that if you have less than 24 months runway, please try and get whatever money comes in, take it. Don't say no, don't worry about valuation, do a convertible. Surprisingly, we've seen Indian family offices also step in. So of course, if it's a new fund, we can provide, but if it's one of our older funds and we run out of cash, we're seeing a lot of the family offices step in and give some bridge rounds and stuff, which has worked well for founders. So our message to them is that, of course, and debt is available. Priya, you're the queen. You should be able to talk through that. But a lot of the companies which are a little more mature are looking at debt as one of the ways to kind of, sail through this next 2 years. I think that's about it.
Yeah, thank you. And for definitely, we do see an increase in debt requests because that is an extending the runway with this less dilutive than equity round. And especially if it's, obviously there's a lot of players here, Altaria, Trifecta, and many others here that are from INR perspective. But if you're a SaaS company that are in US and looking for USD debt, that's something I'm happy to talk about offline to see how we can be of help. Sarita, we're going to start with you. With again, turning the leaf on the kind of more on the positive side, there's still ample cash sitting down, right? You guys are continuing to invest in ecosystem. When I spoke to you all offline, you're very optimistic on the innovation that's coming out of India. What are some of what's next in what's Bloom investing?
So we've been very bullish about the EV sector, climate tech in general. We've invested in about 5 startups in the EV space. And in general, we think that even deep tech is yet to take off in India, right? We've not seen too many deep tech unicorns, but there is a huge scope. There's universities like IISc, BBC, Bangalore Bioinnovation Center. There's lots of good stuff happening there. So we're hoping that in the next decade is going to really take off. So climate tech, some of it in deep tech, biotech, even silicon, we're looking at different options because that's something, again, which the focus may move from China to India. So some of that, and of course, SaaS built in India for the globe, where we're seeing vertical SaaS seems to be coming out as one of our strengths building in India as well. So that's something we have. And the other one is logistics. In spite of having quite a few unicorns there, I think there is still so much to be solved in India. So these are few sectors we're still very bullish about.
That's great. Thank you.
Yeah, so anyway, everybody says my fund is specialized. We're already in a niche area, but I think there are some sectors we're really excited about. I think there's now cool stuff happening. People are actually going more niche. We were all broader, and you'll see this over the years. 2009, we all started with big platform plays, and now we're going into these niche things and actually asking what needs to be solved for Bharat, and trying to do it. And similarly, in ours, we're seeing a lot more founders building for even half the population that was ignored, right? Females, so femtech, health tech, we're seeing so much sexual wellness, great stuff coming through on that. In terms of, EVs we talk about, but even, now what is going to happen after the battery life, second life batteries, kya ho raha hai? How are we recycling? So I think those are very interesting sectors. Sustainability being talked about differently. People looking at consumer angle on sustainability. So people building for even small things like cotton takes up so much water, but building how are we going to do sustainable cotton? Because, it's such a large part of what we wear. So very, very, very interesting stuff. I think the founders now are actually thinking differently, right? They're thinking not just about building cool companies, they're thinking about how are we going to build cool companies that are sustainable, not just, cash-wise, but sustainable for, India and the world? What are we doing to make a difference? Which I think is just the coolest thing that we're seeing, the maturity of the founders coming through.
And for the women founders in the room who have not attended her summit, I have a big time FOMO, missing out last for this year. So please
It was
go,
pretty damn cool.
please go track her down for the invite for the next year.
Vikram was there.
Yeah, it was not just for the women founders. I was also there,
Wow.
so it was a great
So
time.
now I
actually.
really feel.
So, to answer your question, actually, mathematically, if you look at India growing at 8.5% for the next 25 years, will be a $25 trillion economy. From 3.5 trillion, you're adding another about $22 trillion, right, over this next 25 years, right? So, a substantial part of that growth is actually going to come from the startup ecosystem, right? So, and a substantial part of that growth within the startup ecosystem is going to come from tech entrepreneurs. And a lot of innovation is actually happening, and a lot of innovation is actually going to happen as well, right? So we are seeing this from various aspects, right? One is that Indian startups are also going to the world. We're seeing, and we stopped using the term unicorn in our portfolio. We never had a unicorn in our portfolio until Purple became unicorn recently. We use the term dragon. So actually, dragon is valuation at 2 points of time, entry and exit. It's a company that creates more than 1x return of your entire fund. So we believe in value creation, and we look at, therefore, the sectors which can create substantial value over a period of time. So I think, of course, sustainability is a huge aspect, is a huge angle. And within that, we look at SDG very specifically, Sustainable Development Goals, which is actually very measurable. There are 17 goals, 169 targets, 240 GRI metric, which can be tracked on a monthly, quarterly, annual basis. The entrepreneurs will pick very specific metric and then will commit to tracking themselves on that metric. So actually it gives a very meaningful, sustainable kind of a growth. Then of course, climate tech is an emerging area which we believe has a lot of potential, even though from a tech investment perspective, you also have to see capital intensiveness versus capital efficient models. And again, there are newer models emerging in space tech, in other areas as well. The AI ML is of course continuing to boom, and we'll see a lot of opportunities there as well. So I think a lot of value we will see coming from the new age startups, and we'll actually back many of those entrepreneurs.
Really exciting. Just to wrap it up, I think this is definitely not some of the easiest times for the founders, and not obviously for the investors as well. And you all work very hands-on with your portfolio companies. And this time is the time that matters the most, that we have all hands on deck, not just for them to survive, but thrive. Where do you see the founders need the most help, and how are you guys leaning in to help them?
So what we've seen is that at different stages, you need different kind of help, right? So right from the idea stage to pre-series A to series A to series B, the entrepreneurs are also learning and maturing. So, but they need hand-holding at every stage. And even if you go to the IPO stage, you still need hand-holding, right? So, but at early stages, you need much more hand-holding, because at that stage, your math itself for how much capital you need to raise, for example, may be completely wrong. So, many times we've seen entrepreneurs coming to us and we need to raise $5 million. And we sit down with them and we try and understand, why do you need that $5 million? And we actually realize that they don't need more than maybe $1.5 to $2 million. And that's when they realize that some of that, assumptions that they made, in terms of where all they need to put in their efforts, with a little bit of mentoring there, they suddenly realize that they can be much more capital efficient than they actually have been thinking. So, and we have a very structured mentoring program at IVCAP. It actually gets involved with the entrepreneurs very early stages, and that model actually is linked to our entire alumni model. We have our anchor investor is the IIT Alumni Trust, where the substantial part of our carry going back as endowment to the IITs, right? And part of value goes to the mentor trust, where the mentors also been giving back to their alma maters, whatever value that comes to the mentor trust. So there's a lot of connect with the entrepreneurs as well, and we've realized that model actually working very well, with mentors actually sitting down with the entrepreneurs, going very deep into, detailing of, how will you acquire your customers, how will you optimize your customer acquisition costs, how you will optimize your specific cost items, and even fundraising, what kind of funds you should actually raise, and, so they need mentoring across all these areas.
Thank you.
So for us, we've tried to solve this not just for our founders. She Capital wasn't started with a goal of, trying to get 12 portfolio companies to do this. I think for us, it was a larger vision of making sure female founders in general were able to ask and get what they wanted quite openly. And so we've tried to solve for it. You talked about this summit. And this was just a way of making sure female founders understood that there were their own kind. There are plenty of us out there that are doing things very successfully and were able to leverage off of each other. This summit in itself helped my portfolio companies, but it really helped, I think just founders in general talk to each other and figure out synergies. There are so many companies currently that are online that are now looking at offline as an avenue, okay, and need to go offline because online, like offline was saturated, online is becoming saturated. And we had founders in there that were talking GTMT and general trade, modern trade, and they had done that effectively. So it was kind of cool to be able to sit founders down and have learnings just bounce off of each other, and also let them talk to investors and see what was going on. So we've been doing that very consciously, but not in the face with our founders, and making sure that they've been able to do this and figure this out in terms of, otherwise we've kind of taken a hands-off approach. They you reach out to us, we're like, yes, whatever you need, we'll jump in. Otherwise, we know you know what you need to do. Just look at opportunities. If you've not looked at B2B, look at B2B, because it might help you sustain a little. If you've not looked at offline, look at it, but realistically, not go crazy on, going to modern trade and shelving yourself. So that kind of stuff we've tried to do with them.
Thank you.
So given we specialize in early stage, again, it's like kindergarten, they need a lot of hand-holding. And we've learned along the way. So we've built something, and Bloom's biggest strength is the platform, in-house platform. So we started with saying, okay, what is the biggest problem that they have apart from, so we said it's finance, tax, legal. So we built a entity which will just take care of all of their finance, tax, legal. Second problem, we asked them, okay, what more can we help you with, was hiring. Hiring came second on the list. So we built something called Passion Connect, which helps with only hiring for Bloom portfolio companies. So they scout and hire and all of that. Then we said, what else? So fundraising, obviously. So we have an in-house capital markets team, 2 folks who sit full in-house and just map and build relationships with about 400 VCs across the world. And then we help our portfolio companies pitch to them and figure out who's the right partner for them and stuff like that. Then we have an in-house business development team. So go to market in the US and go to market in India. You want to work with an Accenture, let's help you. You want to work with a Google, we'll help you. So that's something in-house. And the biggest strength is the community. Like Anisha was mentioning, we have 11 years, we have 100+ founders. They're all part of this community where they help each other and learn off each other. So our job is just manufacturing serendipity. So we bring them all together and just hope that magic happens.
Can I just add, please? By the way, I've talked to Bloom founders. It's a serious cult, okay? And I said this on LinkedIn too. This is a serious cult for these Bloom founders, all right? So anybody has to map their system. When I grow up, I want to be like this.
They do a great job. Kunal does a great job on the capital access, and the Constellation Blue team does a really great job. Yes, I totally get what you're saying. We have the last two minutes. If you can give one word of advice to founders in the room listening today to kind of keep their head up and keep building, what would that be, Vikram?
I think very clearly build your business for very long term rather than, I think there was a lot of debate recently about take secondary at every opportunity, etc. So I think the mind has to be very clear that if you're solving a problem, just solve it passionately, and just be there for long term. You're not, just trying to make money in the short term. You have to be there for long term.
Great point, Anisha.
I mean, I've always said not quitting is half the battle won. And I stick by that. I started with that saying, founders have to know there's cycles up and down, and you can't panic and you can't be like, oh God, I'm out of here. So as long as you hold steady, you're going to see your wins come through.
That's great. Sarita?
Yeah, lage raho. Basically, just keep building, heads down. We've seen some of our portfolio companies go through really, really bad times, and some of them have really come back. You've seen stories of Exotel And so many of Bloom's Fund 1 companies now rising like the phoenix. So that gives us a lot of hope. So all we tell our founders is just keep building. Don't worry, it's going to happen.
Thank you, everyone. Thank you so much for your insights. Let's give a round of applause to